You're listening to CFRN, a community of believers who trade for a living. To learn more about who we are, what we do, and how we do it, call toll-free 1-866-928-3310, and we'll send you out a no-obligation information kit absolutely free. 866-928-3310. The CFRN Emini Futures Cast is now on Stitcher. Listen to us on your iPhone, Android phones, BlackBerry, and WebOS phones. Stitcher is smart radio for your phone. Find it in your app store or at Stitcher.com. Stitcher Smart Radio, the smarter way to listen to radio.
Are you ready, Steve? Andy? Yeah! Bert? Well, all right, fellas. Let's go!
You're listening to CFRN, the Christian Financial Radio Network.
Today's broadcast is brought to you by Audible. Get a free audiobook download at www.audibletrial.com/CFRN. Over 85,000 titles. Choose from mystery, romance, religion, science, technology, business, New York Times bestsellers, even children's books. You name it, Audible has it. With 85,000 titles to choose from, you're sure to find the perfect audiobook for yourself or to give as a gift, and it's absolutely free. Just point your browser to audibletrial.com/CFRN. That's audibletrial.com/CFRN. And become a part of the audiobook revolution by downloading your free audiobook today. audibletrial.com/CFRN.
Hey trader, want to get rich quick? Well, good luck with that. If on the other hand you actually want to learn how to trade, the place to be is www.cfrn.net. Tune in Monday through Friday, 9 a.m. Eastern for our daily devotional, and then spend the next 3 hours learning how it's done from professional traders who actually trade for a living. That's www.cfrn.net. Every trading day from 9 a.m. to 1 p.m. Eastern. CFRN, a community of believers who trade for a living.
Good afternoon, traders, and welcome back to the CFRN Emini Futures Cast. This is the daily broadcast of Indeterminate Length, where we discuss all things Emini, along with some really big ideas on the finer points of trading gold, bonds, crude, sugar, the euro, and even T-bills. Joining us today from our studios in Boston, Mr. Michael Borth. From our trading desk in Chicago, Mr. Burton Schlichter. Now, to get things started, let's go to our host and founder in Studio A, overlooking South Mountain, America's largest city park. Here's Dwayne.
Hey, good afternoon. Welcome back. Today is Thursday, 21st day of March, 2019. Hope you're having a great Thursday, whoever you are, wherever you are. Thanks so much for joining us today. If you are returning, welcome back. If you're here for the first time, a very special welcome to you. We're certainly glad to have you with us. I have a chart up at the S&P 500 E-mini Futures. It's a little bit of a busy chart today because Michael is out, as you probably know, and I was in the training room this morning, in the chat room there, kind of just, filling up the space. And we did a lot of stuff, talked about the bigger picture, so that's why the chart looks so busy. And as we move through the broadcast today, I'll explain a little bit of it to you. Now, if you can't see the chart, go to our homepage at cfrn.net. On the right-hand side, click the big microphone, follow the instructions. 30 seconds, you'll be registered. Each day, you'll get an email reminder, hey, the show starts in an hour. So you'll be ready, and when you're ready, you join with one-click access. If you happen to be away from the office, away from the desktop, working off a cell phone, not a problem. go to youtube.com/CFRN/live, and there you'll find a live simulcast in real time of each daily broadcast, thanks to the good folks at YouTube. Thank you, YouTube. Here we go. S&P 500 Emini Futures. Yesterday, Fed announcement. Okay, we'll talk about that. We'll talk about where it went, where it came back to find support, how low we went. Oh, and by the way, in case you're new, these horizontal lines here, little dotted lines, yeah, we kind of drew those Monday morning, 3:15 a.m. Pacific, my time. What in the world is anybody doing up? My mother would say, if you're up at 3:15 a.m., you're up to no good. Well, Mom, the times they have changed, right? We're in a global marketplace now. Used to be, the Globex session was what I've heard referred to as a shadow market. Yeah, it's kind of there, but it's not really there. It doesn't really have any effect on, what goes on between 9:30 Eastern and 4 p.m. Eastern, because that's the market. That's Wall Street. Okay. I do know that after the close yesterday, the high probability trade setup that presented itself per our methodology, through our narrative and understanding of the markets, was right here. Okay. And when did that happen? Well, I'll tell you. Happened at 7 a.m. Eastern. That's Globex. Now, where was this low put in? That's the London Open. London Open came down into support. Not surprising. This price channel, which connects this top to this top to what was once a top that we've blown through now, and an exact parallel of that trend line placed across these bottoms. See where I'm going here? Confluence, congruence, whatever you want to call it. Now, the high probability trade setup here, but wait, that gets dwarfed by this. It does. And was any of this a high probability trade setup based on our way of looking at the markets, our understanding, the narrative that we had in place? No. No, it was not. Absolutely, positively not. Did it look like it was going higher? Yep. Did we sit and watch it go higher? Yep. And all along the way, there were opportunities for buyers to stop buying, sellers to step in and really crank up the selling. Here, that was a pretty good spot. Just to point out one, right here it's the weekly trading zone. And it did pull back, and it did hover, and then it marched on. Now, we had drawn some different trend lines coming in, but as price continued to print higher, I'll just show you without changing the angle. We were down. Yeah, I would have to change the angle, wouldn't I? Yeah, so I won't do that. I'll just put this back up. Maybe I'll show you the other way in a minute. Or if you're in the room this morning, you saw it. Okay. So you mean you like this and you don't like this? Very good. Now, so what's this high probability thing? Well, can I give you a perfect scenario? Trade by the numbers. Remember those paint by the number? When you were a kid, you got the paint by the number thing, and you thought you were going to become that guy on TV. What's that guy? Oh, have you guys heard about those videos that are on YouTube with the people whispering, and it's supposed to give you, I know this is an adult audience, so I'll just say it, because it's in all the newspapers, brain orgasms. Yeah, I know, that's what I thought. I listened to one, watched one, it did nothing for me. but it's something about this whispering, and there's like little scratching noises, and it's supposed to do something to your brain. And it only happens in a certain percentage of people. I don't know what the percentage is. I think I'm one of the percentages that it didn't happen to. You're supposed to get a tingling in your scalp just from listening to this, and then it runs down your neck, and I don't know. Anybody familiar with that? I forget what they call them. Oh, somebody put something in the question box. Maybe that's it. Bob Ross, that's the painting guy. Yes, and they say he has the voice. You know what? Where's my phone? Hang on. I've been meaning to tell you guys about this for a while, because I just want to see what someone else's experience, somebody that I actually know, familiar with. Okay, I gotta go to my podcast app, go to my library, and I think this was on the Stuff You Should Know podcast. But hang on. Okay, I think we've ruled that out. No, here we go. ASMR. Anybody ever heard that before? ASMR. Oh, and I'll tell you what that news agency is all about in a minute. And then we'll walk through the charts. Here we go. This is what this is how I found out. I was listening to the Hidden Brain podcast, produced by NPR. It's a great podcast. Not a sponsor of the show, but still a great podcast. Autonomous Sensory Meridian. Now, if you've ever had acupuncture, you'll be familiar with this meridian response, ASMR, is an experience characterized by a static-like or tingling sensation on the skin that typically begins on the scalp and moves down the back of the neck and upper spine. It has been compared with auditory, tactile synesthesia and may overlap the frisson. Well, they're kind of out of my wheelhouse with all of that. Okay, let's go. What is an ASMR video on YouTube? Because this is what the podcast, they watched, I think, hundreds of these things. Coined in 2010. See, that's how far behind the curve I am. ASMR is a relaxing, often sedative sensation that begins on the scalp and moves down the body. YouTube searches for ASMR grew over 200% year over year in 2015 and are consistently growing. On its own, a top ASMR video can garner over 16 million views. And I just found out about it, 2 weeks ago. I've been meaning to tell you about this for 2 weeks. I want to see if you guys get anything out of it, because I don't. If you go to YouTube, a sponsor of the show. All right, here we go. YouTube, come on down. And at the YouTube, we're just going to look for ASMR. Fair enough. Whispers Red. Now, since this came out at the top of the search results, this is not a paid placement. So we just have to assume that this thing, it's coded properly. The HTML5 is in place, and they've gotten a lot of views. Oh, they got this is their channel. Looks like the Tingle Box. See, some people whisper, others tap. One guy's a dentist. He cleans your teeth, and it supposedly gives you this sensation. You can't hear it because of the way our sound's rigged. You can't hear things that come from the You see her, how she's running her fingers over that box? That's supposed to make you get that tingling thing. And she's, I'm guessing that's, I don't know what's in that bag, but you kind of get the idea. A fully whispered ASMR unboxing video. That's a whole nother thing. I don't even want to talk about it. The unboxing thing, that's really weird. Featuring the Tingle Box, an item specially made for the Whispers Red Etsy shop. See, it's taken over. Now this only has 101,000 views. How did they get to the top of Google? Go back here. Now, I find that more interesting than the ASMR video. They only got 100,000 views and they're on top. But that's their channel location that's on top. Okay, so I'm going to let you guys go out and learn all about this on your own as I did. Okay, so here we go. Now, here's 2 million views. It was posted a year ago. I wanted to make my own version of what is a ASMR for quite a while now. While editing, I realized that I had so much more to say and so little time to explain it. Okay. It's, I don't know. Is it real or not? Jim goes, it works on liberals. No offense to those leaning left in our audience. We love you too. The Christian love, all right? All right. So ASMR, I've planted the seed. Now go make it happen, right? And report back, please, on tomorrow's show. Now, real quick, one last thing I'm going to say about this, then we'll come back to it. For everyone who was in the live training room this morning, you heard me say when price was right here, when price was right here at the weekly zone, you heard me say that I could see it going up to test this high, but I had a very difficult time seeing it to go challenge this high, right? That's just my opinion. That's my narrative. It's when I read the newspaper this morning, that's what it said to me. I don't know what it said to you. If I teach you how to read, I'm pretty sure I know what it said to you. But if you learn to read from someone else, then I don't know. Okay? So I said I have a real hard time. I said I have a very vivid imagination, but I have a hard time seeing it go up there. What I can see it doing is pulling back to the BBC, hopefully at a weekly trading zone. Double your pleasure, double your fun, and then we get a nice bounce. That's as high probability as this. Okay? All right. If the BBC holds when it pulls back to it, this is what it looks like when it doesn't hold. This is what it looks like when it holds. So imagine, if you will, this green line, BBC, bull, bear, cross, no mystery, right? Let's say it just wound its way right up here to the zone, and then price pulled back. We know that when price comes from above a weekly trading zone, the high probability is that it's going to provide what? Support. And when price is above the BBC and pulls back to the BBC, the highest probability is that the BBC is going to hold. Imagine price pulling back into the pocket here, just like it pulled up into the pocket here. Pulls back into the pocket, holds, starts to build a leg to the upside, prints above the top of this channel, whoa, which we've already violated anyway. Now I've got a high probability trade set up that takes me from wherever my entry is to just shy of the zone. At that point, I could trail very closely and try to maximize wherever the market's going. And by that point, if I've managed to go from 28.41 up to 48 or 47, I mean, that's 5-6 S&P points. So that's a fine day's work. So you're saying that a move from here to here is a higher probability for you than here to here? That's exactly what I'm saying. Doesn't make my way right and another way wrong. It just makes it my way, our way. Everyone who comes to CFRN to get some kind of an understanding of these markets and how markets work, that's what we lay out. Okay? Let me just pull back the curtain here. It's called a trend following strategy. There you go. Okay. No, Mike B, this is not the highest weekly trading zone. Great question. Thanks for asking. The highest weekly trading zone this week is way up there. 28.78/79. There's 78. And 79. Okay, that's the highest weekly zone. Could we go there? Sure. Yeah, we could. Have we gone there yet? Not yet. 28.79. Okay. Highest weekly trading zone. All right. So, See, even though I had a hard time in my mind's eye seeing what the market did, it did it. Does that make me wrong? No, not at all. The market will very often do something that runs contrary to your narrative, right? We expect, as part of the larger narrative, we expect to see a deeper retracement on the S&P, as indicated by this daily chart. Okay, from the low, December 26th, to the high, Tuesday. The shallowest possible retracement from here, as we go up to challenge that Tuesday high, would be a pullback to the BBC, just like we talked about when this happened. We said we should either get a pullback minimum to the BBC or the minimum 24% Fibonacci retracement. And we talked about what it would mean if we hit these deeper levels. And would that change this new narrative that's been established to the upside? No. But see, this is a chapter, right? Think about it like this. This is a chapter. Hang on. Wait for it. Yeah, let me do this. I can bring in more data that way. This is a chapter inside of this book. That may or may not make sense. If it doesn't make sense, trust me, it makes sense. You just need somebody to explain it to you. And I'll try if you ask me a question or if you come hang out in the room. Oh, by the way, if you've never taken a trial with us to see what the heck we're up to, go to apply.cfrn.net. All we need is your name, email address. Click the button. You'll get a confirmation email. We use double opt-in because we don't believe in spam. We hate it as much as you do. So you'll request a trial. You'll get an email. You go, yep, that really was me. And you're in like Flynn. Your link will show up in the mail. Okay, email. All right, let me tuck this down a minute. Or not. All right, there we go. I'm pulling in as much data as I can. I can usually get back. All right, that's about as good as I can go. What are we back to here? 2015. Obviously, as you know, the chart goes, price goes to the left and down. Look at any chart of the indices since the markets began trading. And one thing that you'll always notice on every, and I'm talking the S&P 500, I'm talking the Dow, I'm talking the Russell, I'm talking the NASDAQ, right? There will be all kinds of stuff like this and even this. Worst December since 1931, right? But here's what I want to be your takeaway. I want you to look at any one of the indexes, S&P, Dow, Russell, NQ, all the way back to the time it started trading. It will start in the bottom left-hand corner of your chart, and it will extend where? To the upper right-hand. Why? Because they are all best of breed indexes. If someone gets weak, if their earnings don't match up, they don't pass muster a couple times in a row, or if the overall health of the company, if the things that qualified it to be in the S&P 500 or to be in the Dow 30, if the things that qualified it to be there start to fade away, guess what? They get kicked to the curb and a new strong bull is brought in. Best of breed, really latch onto that. It's really important to the overall. It doesn't mean you would never take a short trade, because sometimes the current trend based upon the time frame that you're observing will be to the downside. Obviously, yeah, right? But over time, it's going to climb. Now, now that we're looking at this, at the whole book, just imagine that you can see, I can only bring in so much data on this chart. I could get more than that, but apparently oh, there comes a little bit more. Not much. Whatever, this will suffice, right? The whole chart, back to the day the market started trading, this market, ES, whatever day that was, okay? That's the book. That's the book. Now, I refer to this as a chapter, some might call it a page. Do you get my drift, right? This is what we just looked at up close and personal is merely a chapter in the whole book. Now, up close and personal right now, it looks like a big deal. But when we backed across the library to look at the whole book, that seemed pretty small. So we're going to have to challenge this high. Price always reverts to the mean. Always. And for our purposes, the mean is the BBC, the bull bear cross. Price will always come back to it. Okay? And sometimes it'll do what? Price will come back like it did here and fall right through. And when that happens, what do you do? You wait for it to pull back here, because remember, it holds more times than it doesn't. Yeah? Very good. So, is it going to stall here and fail? Is it going to go to the Tuesday high and fail? I don't know. Could it come all the way up here to where we had this bearish cross at 28.95? Could it go all the way up there? Could it hit the highest weekly trading zone, which again is 28.78/79? See, on this daily chart, that doesn't look like much of a stretch. Go back to the 30-minute. It kind of seems like a long way, but now, all of this movement, the this, and the that, all has to do with the Fed. Now, I don't know how alarmed you are by what the Fed said yesterday, but many people are very alarmed. Okay? This business that the Fed did yesterday of saying no interest rates this year and only one next year. What does that man know that the rest of us don't? Because we've been told that we're in the best, strongest economy in the history of America, that we are indeed the envy of the world. They don't bring up too much about how China is breathing down our neck, but they are, right? Oh, there's John. All right, let me open up his mic. Stand by for John. Hey. John, welcome to the show. You have an open mic.
Yeah, hi there. Thanks.
Hey, I want to say, before you do, good call. Yesterday you said price could run up to challenge the Tuesday high. That bell's for you.
Thank you. Okay. It actually went up more dramatically than I thought. In terms of speed, and it sort of had that first reaction and then pull back overnight. But look at this was a very big reversal this morning, huge actually. Now we have to be pretty careful, because I did say yesterday, we might set up for a double top.
Mm-hmm. You sure did.
And we're the 21st of March today, so we've only got about a week left. And things could start to deteriorate. As a matter of fact, BIIB, which is a pharmaceutical stock, is down about $80 or $90 this morning. It's a pretty big drop.
Here we go on a daily.
Yeah, look at that. Don't see that every day. So
is there something particular weighing heavy on this thing? I mean, is it some trial results, or I didn't even see, I was looking up here, John. I didn't even see this candle down here. Now I see it. This thing dropped. It got lower $100 on the open. John, you can't keep doing this.
Yeah. So as you can see, it's just
$100 drop. What's the deal?
Yeah, they had some sort of an Alzheimer's study, and they just like basically canceled it. It was so bad it didn't.
They forgot where they put the results. Oh boy.
Well, whatever. Something awful happened, and I mean the
terrible.
stocks.
Because that is one area right now that I'm telling you that is an insidious thing. This Alzheimer's, it's affecting so many people, and I've got to believe it has something to do with the stuff we're putting in our bodies or breathing in our air. I mean, because back when I was a kid, you always knew somebody. There was somebody in the family or a neighbor who kind of went, they called it senile back then. I don't think that's politically correct anymore. But now it's like it's everywhere, and it's. What do you think? What do you think is the major contributor to it?
I don't know. I got a friend actually who's suffering really badly right now. His wife has gone to the point where she doesn't recognize him and things like that. It's just awful.
So that was my grandfather on my dad's side. And, I had an aunt. She wasn't a blood relative, but we called her aunt because she took care of me and my little brother while my parents worked when we were children for many, many years. When it fell on her. 20 years she lived. Her body physically strong as a horse. Couldn't ask for anyone to be more healthy physically. But for 20 years upstairs, it just checked out, and that was heartbreaking.
Yeah. I should tell the audience that there is a pretty interesting. There was a news item about a week ago. I think it came out earlier, but it was it may have been a rehashed news that opticians, when they're looking at your eyes, and if you Google, this eye scan can predict Alzheimer's by 20 years, apparently as much as 20 years ahead. It's very interesting.
What's needed is a rapid, non-invasive, and inexpensive way to detect Alzheimer's at the earliest stages. So here's exactly what you're talking about.
Yeah, and on ABC, go to ABC News Australia, maybe just with that same headline, just put in, because they showed
News Australia.
Yeah, with that same headline.
Okay.
If you might have to put
no,
okay.
Hang on, I get it. My search box. There we go.
Yeah, I guess the Alzheimer's eye scan. Yeah.
Eye scan might do it.
I put the Alzheimer's in as well. Yeah.
Excessive sleep during the day a risk factor for Alzheimer's. Wow, I did not heard that.
They're the one. I think that's the one down there. Maybe that one.
Right here. Eye test may predict.
Oh no, it's the next one. Next one down. Because if you click on that, it's actually going to show you what the difference is to a healthy person and just down a bit more. Oh, maybe it's in one of these news reports. Anyway, look, it has a picture of
related stories,
the difference between good and bad, and it's actually quite startling, the difference.
I would like to see that. Is it something you can notice visibly in the iris of the eye?
I'll dig it out and I'll send it to you tomorrow for the tomorrow show.
Let's see if this one,
because it's the sort of thing you could take into your eye doctor and say, check me out. Do I look anything like this? So
game-changing work. Boy, it sure seems like they would show a picture here, doesn't it?
Yeah. No, there's actually two reports that came out.
The research has been published here.
All right, put that out then. Yeah, that might have it in there.
Scanning, ultrasound, remote. What? Wow. Look at that.
Yeah.
Huh. Okay, this is talking about laboratory ants, so I guess this is...
there was a little bit of a picture there below that looked like a little bit like it.
Further down?
Yeah. that's not it. It's very startling, the picture. I'll dig it out and try and get it to you tomorrow.
Let's try this. Alzheimer eye scan chart.
So there was actually one. Yeah, there was only. Okay, it might be a little bit lower than that. Try.
Images for Alzheimer eye scan chart.
Yeah, actually, you probably see that a little bit in that picture there where it's worse on the right hand side. That's close to it, but the way. Oh, try that. Could your doctor see the symptoms?
I already clicked on one. I'll go back and click on that one.
That might be the one.
Okay, it's not that one.
No, it's not there. There was only one. There was only one of the. There was about 4 articles that only one of them had the vivid picture. There you go. It's something similar to something.
Okay.
It's.
All right. So this is the cognitively healthy adult.
Yeah.
This is an adult with Alzheimer's, but they're saying that this can predict decades ahead. So do they?
Go down a bit more. See, there's another picture there. No, I'll get a hold of it. I saved it, that particular picture, so I'll dig it out.
So it is something that you need to be able to look into the eye like this. It's not some. You wouldn't just walk up to a person. In other words, could a doctor just look at you and say?
Well, that was what was fascinating about this article. It showed good and bad, and the difference was pretty easy for anybody to observe. You could tell right away. It's better than that. Better than the one there. So
okay, maybe this site right here that has all these images. Maybe this one will be the one. Okay.
So what I was going to say is that when you get a widely held stock like Biogen dropping $100, it's kind of like Facebook. Oh, there you go. This is a little bit of it. Something similar to that. But there was a good and a bad side by side. So anyway, the fact of it is that you've got tens of thousands of major institutional holders who are long stock like
this Biogen, right?
And the stock drops $100. They start lightening up on other things, and they start getting cautious, and they don't tend to be as aggressive as they, it definitely, when you see what I call shot across the bows type, anomalies like this, you definitely have to start being careful, because they often mark the beginning of a correction, which, it feels that we're getting fairly close to having. I think just when I came in, you were talking about the Fed.
Right.
I mean,
now, what he said yesterday, John. Let me just ask you up front. Have you ever heard a Fed say, "We're not going to raise interest rate this year, and we're only going to raise them once next year"? Have you ever seen such a far-reaching? My goodness, the sky must be falling.
Well, I think he was giving himself some cover, in all honesty, because if the economy, we thought they might lower rates back in in May or June. I'm not so sure now, and because I think the way the world economy is coming back, there's a huge amount of stimulus going on in China, and this huge recovery over the last 3 months, which has hit all world markets, is actually positive, and it's likely to give us an economic spurt in the summer, probably starting in the summer, going into the summer. And there's a real possibility that, if they do an infrastructure bill, or, the money keeps coming in from overseas, and things get better, the Fed may be forced to raise rates sooner. They might raise rates this year. So I guess that gives them cover. But the interesting thing about what he said is that if they raise rates next year, when are they going to raise? Are they going to raise in the first quarter? Because really,
according to Jamie Dimon, it's going to be next fall.
You mean this? You mean
no, next year?
No, it's not going to happen because of the election. They're not going to raise rates
Like I'm
ahead of the
saying,
election.
FYI, folks, Jamie Dimon is not the Fed. He might think he is, but he's not.
Yeah.
I couldn't believe
No,
he was.
if it's going to happen, it'll be in the first quarter, unless there's something really outlandish going on, like, you know, interest rates start going through the roof or something like that, you know, because the economy is too strong. And there's a real possibility of that happening. So, that would be, but certainly it was I think he stuck that in there just to give him cover, you know. So if things, you know, if the economy gets really strong later this year, they may be forced to raise. So, and that would be good for at least for a while. It might have some bad consequences some months later. But
and also understand that although Jerome stood up and promised you no rate hike this year, he not too many months ago he stood up and said he talked about how aggressive they were going to be.
Yeah.
Not only aren't they going to raise interest rates, they're not going to unwind the balance sheet anymore.
Yeah, no, that was a pretty big deal, actually.
That's a big deal. But bear in mind, it would take probably 2 back-to-back high-impact economic reports that go south, and he'll be back next time going, well, things have changed. We're going to have to raise them rates, or whatever the case might be. Right?
Yeah.
He can change. He's left himself lots of flexibility. He can do whatever he wants as long as he has the job.
Yeah.
And he says Trump can't take away the job. So, hey, John.
Yeah, the interesting thing is if they don't raise rates,
Yeah.
you know, within 6 months of the election, it pretty much takes them off the table right through 2020, which would be, you know, probably pretty positive. So,
well, if he's got an axe to grind with Trump, and he says Trump can't tell him what to do and can't take away his job, maybe he does. Right? Okay.
I don't think that's. I think he's done. I'm sure they've come to an agreement, you know, because of the way he just, you know, became so dovish so quick. You know, I think he kind of got a smack across the wrist.
He flew in on the wings of a dove yesterday, that's for sure. Hey, John, I just want to show you this real quick before I take it down. I didn't find the picture you're referring to, but right here, this says it all. All of us have a small area devoid of blood vessels in the center of your retina that is responsible for your most precise vision. We found that this zone lacking blood vessels was significantly enlarged in people with preclinical Alzheimer's disease.
Yeah.
And so it's really the thickness of the retina. It says that a thinning retina. Significant brain damage from Alzheimer's can occur years before any symptoms, such as memory loss and cognitive decline, appear. Scientists estimate that Alzheimer's-related plaques can build up in the brain 2 decades before the onset of symptoms. So researchers have been looking for ways to detect the disease sooner.
Yeah, and you know what's so interesting about this? This is one of these small discoveries, if you like, that can have a huge impact on everybody because you know it's kind of like once, you know, you might an optometrist might go through his whole life never figuring out what the difference in blood vessels and things like that are, and then when you take one look at this chart that hopefully I'll be able to provide tomorrow, you know, once and because like all doctors, I mean, you know, a lot of reasons why doctors can diagnose stuff quick is because they've seen the same symptoms in other people, but this way you know, the whole mindset of an optometrist would change because he would actually be looking at everybody in the future and eyeing their eye makeup, you know, with a view to how, you know, to their vulnerability to Alzheimer's. So it's a massive breakthrough, really, in terms of people's, you know, in terms of the ability to at least learn a lot more about this problem.
Somebody just sent me a link that might. This will be the last rabbit I'll chase, and then tomorrow you'll bring us the link if you can.
There it is.
But that doesn't. I want to see what the eye.
Yeah.
You know, my wife. I don't know if you're familiar. Are you familiar with iridology? It's the study of the iris. It's there's a special camera, and you sit at it much like that person on the screen earlier was sitting at that eye scanning machine. But what's driving it is a 35 millimeter like Nikon, and it takes this super close up of the eye. And you know how in Chinese, in acupuncture, and in reflexology, that certain, you know, parts of the body represent other, organs and different things. You're familiar with that, right?
Mm-hmm.
How acupuncture is supposed to work and all that. Well, the eye is the window to the soul, and so they say that the iris is a roadmap to the health of the body. And people who practice iridology, you can Google it, it's a thing, has been. When I met my wife, we were both just children, but she had an iridology camera, and she would take pictures of people, and she would read them, and it was pretty uncanny. And she could tell somebody, oh, it looks like you broke your left leg at some point in your life. And they'd be like, whoa, how do you know that? Oh, you got a little constipation going on, huh? What? How do you know that? It's all in the eye. Now, I don't know how to do it. I can only say that I've vetted as far as my wife, who I've spent the last 35 years with. She fully believes in it. She doesn't do it anymore, but she believes in the science behind it. And so I became a believer as well. Did we do anything with it above and beyond that? No. I mean, she used to, I think, charge $50 to read somebody's eyes, but then, like I said, that was back when we were children. So go ahead.
So, going back to the stock situation.
Here we go. I got the chart up.
Oh, Microsoft is, if you could put Microsoft
sure.
up.
Here we go.
Yeah,
That's
Microsoft made a new all-time high here today. And if you remember, there's a $130 target on that stock. So it's probably got a little bit more upside ahead of it. Thanks to, I think this 118 level is approximately where Bill Gates is worth, second guy in history to be worth more than 100 billion. So Microsoft is probably closer to becoming a $1 trillion company than any of the others. And it looks like Google might be the next in line. If you look at Google, it's had a pretty good recovery. It's not an all-time high yet, but it's not that far away.
Right, that's true. All right. What are you going to look at now?
Sorry, I thought you were going to put up Google.
Oh, Google, yeah, sure I will. Yeah, I got distracted for a second. Okay, there's Google.
Yeah, it's obviously acting pretty strong here. It's kind of accelerating to the upside, actually. And Facebook is starting to get a little bit of upside traction as well. Remember, Facebook has a big gap. Might want to just, if you want to squeeze that up, just to see how close we are to hitting new all-time highs in Google.
Those who are new to markets might look at that Microsoft price and this Google price and go, "Wow, what a disparity!" Microsoft has split their stock more times than I can remember, and Google, I'm not even sure. Have they ever split?
I don't think so.
I don't think so.
No.
And so, and if you don't understand what that means, just please put it in the chat box.
So they went public at 100. They went public at 100. So they're basically up. So they've got a ways to go. It looks like it really looks like that stock wants to get up, test the high, and obviously that would mean Microsoft would probably continue higher. Another stock to look at today.
We just looked at a $100 gap higher open. Now we're looking at a $50.
Yep.
I mean, the 100 was gap lower, but this is gap higher. Go ahead.
Have a look at Micron. By the way, semiconductors are on fire today.
Micron, what's the symbol?
Thanks to MU.
Okay.
So it's gapped higher and
right up into resistance, yeah?
Yeah.
So if you can take that out, I mean, the chart explains itself, literally.
Yeah. Could you put Facebook up?
I sure can.
Yeah, so I think we've had we've tested the bottom of that gap now, and it's probably got some upside from here to Facebook, as it, because what knocked it down, which was, had some outages and this business about investigating them for selling people's stuff, probably behind it now, and it could potentially, break out to new highs, new short-term highs, and it's probably going to surprise again on the earnings like it gapped up previously. So if we had another gap up, you know, we'd be up there challenging the 200 again.
Do you think Facebook is a monopoly? Do you think it needs to be broken up?
I don't think yet. Maybe sometime in the future, but I think it's doing okay at the moment.
You know, who well, you know that whole concept of telling a company,
just because you got to, the guy bought Instagram for I think $1 billion or something, and it's worth probably 100 times that or something today. They bought WhatsApp for three, I can't remember, 3 or 6 billion, but it was, I mean, it's worth a couple of $100 billion today, something like that.
He was laughed at for buying
Instagram at that price. It's not fair to break up a company that made a couple of unbelievable purchases and developed them into what they are today.
Exactly,
I mean,
exactly. That's my point. I got, I'm no Mark Zuckerberg fan. I mean, I do respect him for all that he's done and accomplished, but there's other things that I, got no use for. But that's just life. But for somebody else to come in and say, "Oh, you've been too successful, you've gotten too big, now you better knock it off," I don't like that. But then I look back to Ma Bell. Remember when it was called Ma Bell?
Mm-hmm.
Yeah, Southern Bell and Pacific Bell, all under the umbrella of Ma Bell, and they were determined to be too big for their own britches. They got split up, broke, and that opened the door for a crazy little thing called MCI. Remember MCI?
Mm-hmm.
Yeah, it was the fodder of late night stand-up comedians. They laughed and they joked. Well, there's the phone company, and there's this thing called MCI, and you had to punch in all these numbers, this code, so that you could get a real cheap long distance phone call. But remember when long distance cost money?
Mm-hmm.
I needed to send a fax the other day, and I haven't sent a fax in many years. I called the local UPS store and I go, "Do you guys do fax service?" And he's like, "Yeah." Now I needed to send about 50 pages. I go, "What is it per page?" He goes, "$1.50." No, he said, "Is it local or long distance?" I said, "Since when does long distance matter anymore?" He goes, "Well, I'm just reading it off the paper here." I said, "Long distance, New Mexico." And he goes, "Oh, then that'd be $1.50 a page." I said, "I got like 50 pages." He goes, "Oh, well, you get a price break at 10 pages. It goes down to 75 cents a page." I just said, "Okay, thanks," and hung up. I mean, what are you going to do, right? Long distance. I remember my grandmother when we were kids.
By email, Dwayne.
Hey, Dr. Tom, how are you? Welcome to the show.
Hey. There's a little program you could get, and you just scan things in, and then if it has to go to a fax machine, the program will send the scanned document to the machine, and they'll receive it as a fax, as if it faxed it. Otherwise, if they have an email address, then just send it by email. But faxes are sort of passe, like my grandma's bloomers.
Exactly. But boy, remember when it was a big deal? Oh my God, he's got a fax machine. When I was moved many years ago, decades, I was sent up to Oregon to open a sales office for the company that I worked for. And I was hiring people, and I hired a secretary, and faxes had just come on the scene. And I'll never forget, I said, "Sally," and that was really her name, Sally. I said, "Sally, go fax this to Phoenix." She goes, "Okay, I will." And about 10 minutes later, she comes back. She had a puzzled look on her face, and she goes, "I just cannot get this thing to work." I go, "Well, what's wrong?" She goes, "I put it in just like you showed me. I hit the button just like you showed me, and then it just spits it back out. I put it back in, it spits it back out. I put it back in, it spits it back out." And I just started laughing. And she goes, "Why are you laughing at me?" And so I calmed down and explained to her that, it doesn't actually send that piece of paper through the phone line, but just, yeah, that's a true story.
I have college kids here in my office because they're so good with the technical things.
Right.
But every once in a while, I'll say, "Here, send this letter to so-and-so." And they don't know how to address a letter. They don't know how to put postage on it. They never get letters. They don't.
They don't know what a knight in white satin really is.
And I had pretty much the same reaction when I had one of them send a fax. He finally got the concept, but he didn't put a 1 in front of the long distance number, because you don't have to do that on your cell phone, right?
Right.
And he just couldn't figure out why it wasn't working. So it's pretty funny.
That is. That is.
I remember when I would get a call and my secretary would say, you've got a long distance call.
Yeah. My grandmother would go, shh, be quiet. He's talking long distance.
Right. And you ran to get the call because you knew it was costing so much. It was costing like sometimes 25 cents a minute, you know. And so you would go get on the call really quickly and everything. And long distance was like the big deal.
Well, I think my grandmother thought that because it was long distance, it would be harder for them to hear, you know. I think that's...
Oh, yeah. And they shouted, right?
Right.
When they're on long distance,
Yeah.
they'd always talk really loud because this is long and this is called, you know.
John, what else did you want to look at here? Dr. Tom, hang on for just 1 second. We're going to
Listen,
finish up here.
I think
Sorry to
one
interrupt.
thing is
No.
the dollar got stronger overnight, and so they're knocking the gold down again a bit from its highs, which is kind of unfortunate. But it might be just a pullback here, you know, maybe the dollar just went back up to test the 96.
Now, the dollar tanked on the Fed announcement yesterday, correct?
Yeah, it did, but it bounced back today, and if it can't get above 96 meaningfully and starts going down again, I think that would be a positive. But you know, they just the currencies tend to struggle. I think also the VIX, the VIXs are probably hitting new lows today, so or close to it. So remember we talked about the dust yesterday tanking on the Fed news, and the gold's going up. That actually happened. They didn't make new lows yet, but I see the gold's actually turning a bit up here, so that might be.
John, this 1350 area is starting to look like a real possibility.
Yeah. No, if we can get above
1366 area.
if we can get above 1320. 1325, really 1330. I think then you're going to see a sustained up move, and this stop-start way that we've been going on the gold, it often is a prelude to a pretty big up move.
Yeah, look at this dust. It ran into that trend line yesterday that we drew during the show.
Yeah.
It's right there.
Yeah, the dust looks pretty vulnerable now to dropping to new lows, which would be positive for the gold market.
Gotcha.
Okie doke.
If you can bring those pictures with you tomorrow of the eye scans, that'd be great.
Okay. All right. Thanks, Tom. Have a good afternoon to everybody. Bye-bye.
Thanks.
Okay. Goodbye.
So it's Dr. Tom Day. How are you, Dr. Tom?
I'm fine, brother. How you doing?
I'm doing good. Folks, if you want to know what we're about to talk about, you can go to CFRNgold.com. That's one word. CFRNgold.com. And you'll get a starter pack that'll tell you all about investment grade gold. What is investment grade gold, Dr. Tom?
Well, investment grade gold is gold that actually makes you money. Most people think that they are making money with gold bullion. You know, if it goes from 1200 to 1320, you made money. You could do that in short-term trading, but over a long period of time, basically gold bullion, like Krugerrands or Maple Leafs or American Eagles, just keep even with inflation. So they're more like insurance. Investment grade gold is gold that's rare and in great condition. Those are the two main things, like any other collectible. And you actually make real money because they go up in real value. They beat inflation. Wealthiest people in the world, and I know a lot of them personally, millionaires and multimillionaires, and I even know a few billionaires. They all have some kind of collectible, and mostly they have collectible gold. So it's a safe harbor investment that everybody should be involved in.
Sounds good to me.
Well,
what do you want to talk about specifically today? What's on your agenda?
I would like to talk about inflation.
Okay.
Because
now that's something that okay, how old would you have to be right now in in the here and now, how old would you have to be to really know what inflation is and what it can do to people? I mean, you'd have to be, more than a teenager, right?
Well, it's interesting. I mean, in 1933, when FDR took us off the gold standard, the smartest people, including bankers, didn't know what inflation was because we'd never had any in this country for over 140 years. But I was doing a speech at a money show with several thousand people in the audience, and I asked, who here knows what inflation is? And this kid raised his hand up. So I said, stand up. He looked like he's about 10 years old. I said, all right, what's inflation? He says, well, I'm paying 10 cents more for a Pepsi Cola today than I did last year. And that's about all most people understand about inflation.
Okay.
Today we're going to find there's a lot more to it than that.
That's something we can relate to. It's the same Pepsi. It's the same size bottle. Although when the price goes up, you should check the contents label, because sometimes they'll shave an ounce or two off and increase the price and put a concave in the bottom of the bottle to make you think you're getting the same amount. That's just right.
Oh, yeah. I mean, Snickers bars used to be my favorites, right? Back when I ate sugar. And I remember getting a very large Snickers bar, about 6 inches long and tall and fat,
Weighed about a half a pound.
Yeah, it was big.
Right.
And I paid like 50 cents for it. Today you pay a couple of bucks for one that's half the size. Do you remember the world's finest chocolates that all the high school bands and stuff used to sell?
Yes, I do.
Good stuff, by the way. Again, they used to be big. They were about 8 or 10 inches long, big bars, and they sold for $1. Now you get one that's a third of the size, and they're charging like $4 a piece for them or something. So that's what most people think inflation is you're getting less and paying more. But there's a lot more to inflation, and that's what I'd like to explain today, because if you don't understand this, then you're not going to be successful in any of your investments. You have to know how to beat inflation.
Very good. I look forward to this. Where do we start?
Okay.
You going to take the charts?
Yes, please.
Okay, I'll send them your way.
I like to be in control.
Okay. Okay. You should have a pop-up over your way.
I've got it, and I'm about to give you my screen. All right.
Inflation is coming, part 1.
Yes.
Got it.
All right. I speak a lot on these subjects all over the world, and I hear people say this all the time, I'm not interested in economics. And I bet you if I asked for a raise of hands right now, half the people listening would say, I'm not interested in economics. Okay?
You have an unusual bunch here. There might be more than one or two that raise their hands, but yes, what you're saying is true. Even with this audience, you're going to, nobody wants to, let somebody else worry about that.
Yeah, they do. And you get the same thing. Some people say, well, I'm not interested in politics. And yet everybody's interested in politics, because both affect your ability to support your family, to pay the mortgage, and so on. Politics and economics are inextricably intertwined. I love that word. Every once in a while I get to use a big word, and I enjoy it. But you cannot separate the two. It's like politics are the egg yolks, and economics are the egg whites. Once you scramble them and make an omelet, they're together, and that's the way it works. If you don't have an understanding, at least a basic understanding of what's happening to us politically, for instance, the national debt, and if you don't understand economics, then you're going to make big mistakes. I've talked to, just coincidentally, and that's why I decided to talk about this today, I've talked to several people in the last few days that say, yeah, I'm making pretty good money. My IRA is making 4%, or I'm making 1.5% on my CD. And I say, no, you're not. You know, if you're making 1.5% of CD and inflation is 5%, you're losing 3.5% a year. Okay, if you're making 4% on a bond fund or an IRA, you're losing 1% a year. That's assuming 5% inflation. If it's 6%, then the point is you have to subtract whatever you think you're making from inflation, and then you can find out if you're really making money. And in general, you've got to make about 10% a year to cover the average inflation, which is about 5%. So that's a bottom line rule of investing. If you don't get that, then you're destined to fail. You've got to beat inflation. So even if you didn't think you're interested in inflation, you really are. So to understand what inflation is and why we have it, we have to understand fiat currency. I'm sure everybody here understands that fiat currency is basically paper that the government prints, it's backed by nothing, and it has no real value. And they even admit it right on the notes, right on the bills. It says Federal Reserve note. Well, what's a note, Dwayne?
Well, a formal authorization or proposition, a decree. I'm just reading the definition of fiat.
Okay.
You tell me.
But the definition of a note, the common definition, is an IOU. That's all our money is a bunch of IOUs.
According to Webster, fiat money refers to any currency lacking intrinsic value that is declared legal tender by a government.
Okay.
In this respect, unlike currencies backed, I'll just finish that thought. Where'd it go? Well, suppose I click to the next page, and fiat money allows the declaring government to employ virtually any material, such as paper, which is lightweight and convenient for carrying, as a medium of exchange. However, since the value of fiat money lies solely in the faith of those using it, its value can be easily diminished and result in rapid inflation. Back to you.
That's why they call it faith money.
All you need is an H, F-A-I-T-H, fiat.
That just rearrange the letters.
Yeah. Right.
I have a friend that teaches on this as well, and I loved his example. He showed a bunch of kids playing musical chairs, and they're walking around, and when the music stops, everybody sits down, but they've removed one chair, right? And so somebody's left without a place to sit. They're out of the game. And they keep on going until nobody is. Well, as long as you can find somebody that is dumb enough to take your $20 bill and give you $20 worth of stuff for it, then it works. But once people start losing faith in their money, as has happened in numerous countries, then you can't spend the money, because it only works if people have faith in it. So the question is, can a society function long term on fiat currency? Well, let's see. The Roman Empire. The reason it fell was because it hyperinflated its money. They did it deliberately because their politicians, they call them senators back then, they had the same problem that our senators and congressmen have today. They need to make the people happy, and it takes money to make the people happy. So they did all the usual things. They raised taxes, but at the same time, they started adulterating their money. This is a Roman denarius, a silver coin. That was their common currency. This is what happened to the Roman currency over a period of 218 years. They went from 94% silver in their silver coins, which is acceptable. You always have an alloy, okay, because both silver and gold are fairly malleable. Gold more than silver, but almost all countries mix some other base metal like copper in it. Right. Well, they started mixing in lead, because it's the same, looks more like silver. And by the time the Roman Empire fell, it was down to 1% silver in a silver coin. And so the backbone of the Roman Empire which was the Roman army, the centurions, and so on, they started deserting in droves and going back home and farming. These were proud soldiers, warriors, but they had to feed their kids, and the money the government was paying with them, people wouldn't accept it. They were
not willing to fight for that.
Yeah, I'm risking my life, and you're paying me with garbage. Okay, so actually, Rome invented inflation, and they didn't even have a printing press. But people say, well, that doesn't really have any relevance today. That was 2,000 years ago. Well, what's happened today? Today, most people think they're smarter and they're immune to the lessons of history and also laws of economics. Okay. Yeah. What's that?
I'm smarter than history.
Right. So let's look at modern times and see what's happened. It's a mind-boggling number, but 10% of the world's currencies in just the last 25 years, anybody would agree that's modern times, have been hyperinflated. That means they've been devalued deliberately by their governments. Now, we can go back farther to the German hyperinflation.
Okay, now what you just said is very, very important. It didn't happen just as a matter of happenstance, but it was intentionally done.
Yeah, it can't happen by accident. It can't happen by stupidity. Maybe the government not really understanding what they're doing, but when push comes to shove, it's the government that does it to us. Okay, but the German hyperinflation in 1919, it was 4 marks to the dollar, and 4 years later, it was something like 4.2 trillion marks to the dollar. And people were literally burning the currency in their fireplaces because it was cheaper than buying wood or coal.
Yeah.
But then you could go back farther. 1789 in France is another great example. Twice these people tried out different currencies, got off the gold standard, tried paper currencies. The people were rioting because they couldn't buy anything. The merchants wouldn't accept it. They said, we want gold or silver. We're not accepting this government money. So they came out with a different government money, and it failed. The first one took 8 years to completely hyperinflate. The second one only took 2 years. And so, but it's not just ancient history or even 100-year-old, 200-year-old history. Modern times, 25 years. A prime example of that is Zimbabwe. They were $1.25 Zimbabwe to $1 US. And within 4 years, I don't know why 4 years seems to sort of be the magic number for hyperinflation, but most hyperinflations occur over 4-year time span. Within 4 years, they were printing the largest banknotes ever issued, $100 trillion bills. Mm. And they were worth 3 cents US. Today, they're worth nothing. Mm. So the average lifespan of a paper currency, a fiat currency backed by nothing, is 37 years. Well, then why has our money lasted longer than that? Well, it's a real simple explanation. It wouldn't have lasted much longer. I mean, some currencies last longer than 37, some only last 10 years, but right. The average is 37. We beat that. We're almost at 86 years. But the reason is that in 1944, we became the world reserve currency. Britain had held that position for over 200 years. But when you were the world reserve currency, you could just keep printing, and as long as people accept your money, you don't go into hyperinflation. But when people lose confidence, and they're starting to lose confidence now, that's when the poo-poo hits the fan. Okay, so what causes hyperinflation? Okay, here's the
$1 million Zimbabwe note.
Yeah, and then they went to the $1 billion notes, and then like a trillion. That's, it's just mind-boggling. But what actually causes hyperinflation? Well, to really answer that, we have to really answer 4 questions. First of all, what is inflation? Not hyperinflation. What is inflation? Okay. People mistakenly think inflation is rising prices. That's a symptom of inflation. Inflation is exactly what it sounds like. We're inflating the money supply. Okay? We're creating money out of thin air.
Oh.
So there's more and more money circulating.
Well, we would never do that here in America.
Oh, no. Of course not. So we can live
That's
with
another
some
thing the Fed
inflation.
said yesterday is they're going to stop unwinding the balance sheet. Not only will there be no more interest rate hikes this year and only one next year, but we're going to stop unwinding the balance sheet from that last printing spree we went on.
That's interesting. They very seldom announce in one year what they're going to do in the next year.
If this didn't send shivers down people's spines, I don't know what would. What does this man know? We're being told this is the greatest economy America's ever known. We're the envy of the world. And I think both of those things are kind of true. But apparently Jerome knows something we don't.
Yes, you're absolutely right. The reason they raise rates is supposedly to protect against deflation. But I've talked about this before. Deflation is basically impossible in the United States because the way our system is set up, it's all based on inflation. We've talked about this in more detail, but local banks create money. It's not just the Fed. The Fed only creates about 40% of the money now. They brag about the fact that they've engineered the system so that 60% of the money is created by a local bank. You, Dwayne, have been guilty of creating counterfeit money because you've gone to the bank and gotten a mortgage or a loan, and the bank only has to have 10% reserves to cover a particular loan. So
I would be duplicitous in that crime even if I had only made a deposit and never actually taken a loan.
Not as much as the guy who signed it.
I'm in cahoots with the bank and the guy that takes the mortgage.
Yeah, well, you're at the very least an enabler.
There you go. I'm an enabler. Okay, very good.
But if you went and signed a note, and it's a $100,000 note, that means the bank has to have $10,000 on deposit. So people actually believe that we're borrowing money that we or other people have deposited. That's not what's happening. That money stays in reserve. And by the way, it gets complicated, but sometimes it can get to be as little as 3 or 4%, right, particularly with mortgages. But let's just use 10%. If $10,000 is on deposit, you can borrow $100,000. So you and the banker, by putting your signatures on that, you created $90,000 of funny money. Okay? Now that's inflation. It's increasing the money supply. What is hyperinflation? Hyperinflation is 10% or greater inflation annually. Some of the inflations we've seen have ended up being as much as 100% a day, okay? But we had a mild hyperinflation under Jimmy Carter, a free spender and a high taxer. And
that's when mortgages hit 18% during that period?
Yeah, and I had CDs at 21%. Okay, that's hyperinflation, but we managed to keep that under control. But runaway hyperinflation, I probably should have asked another question here. What is runaway hyperinflation? That's when no one can control it anymore. The government is printing as fast as it can. In most countries where this happens, the governments have printing presses running 3 shifts, 24 hours a day, and no days off, 7 days a week, printing money, and they can't keep up with it. That's runaway hyperinflation. So then what is deflation? To understand inflation, you have to understand what deflation is. Deflation, people think, is the opposite of their impression of inflation. Rising prices, let me close that down there. Rising prices, rising wages is inflation. So therefore, prices dropping and wages dropping is deflation. But again, that's a symptom. Deflation would be actually deflating the money supply. I don't understand why our politicians can't understand these simple concepts.
Well, while we're at the inflations, let's talk about stagflation for a second.
Okay.
No, you talk about it. What is stagflation? It's got to be somewhere between inflation and deflation, right?
Well, it's inflation in a stagnant economy, but I'd like to finish up with this thought here.
Go ahead.
Deflation, in order for that to happen, we'd have to deflate the money supply. Well,
unwind the balance sheet.
Yeah, how would deflation happen? It's the opposite of what we just described as inflation. They've created all these money mostly by making loans, and so they'd have to call in those loans. They'd have to terminate mortgages. They'd have to call in personal loans, business loans, and so on, and take that money back out of circulation. Well, if they did that at this point, we're so deep into inflation. We've had 96% inflation since the last time we had real money, which was 1933. We had gold-backed money. That deflation would just collapse the economy.
And you're talking about individuals at the mortgage level. I mean, what about our government? How much debt does our government have? As a nation, well, how much money do we owe?
$126 trillion.
Thank you.
Okay.
Try sucking that out of the economy. Wow.
Yeah, it's impossible because our whole economy, our whole national net worth is only a little over $100 trillion.
Or people believing a lie. Our whole economy is dependent upon the rest of the world believing a lie. There it is. It's out in the open, naked.
People actually sell other currencies to buy our currency because they think that ours is a safe currency. Right. In a relative manner, it is. It's more stable than most other currencies. Right. But to sell one crappy currency to buy another crappy currency is sort of like the height of stupidity.
At least our currency is not manipulated like they say the Chinese yuan is manipulated by the government. Ha ha. They don't call. Now they do peg, to coin a phrase, they do peg China for manipulating the yuan, but yet they can look in the mirror. Fed officials here in the United States, government officials, they can look in the mirror and go, well, at least we here in America, we don't manipulate the currency. What was quantitative easing if that's not currency manipulation?
Yeah, and what is the Federal Reserve System itself controlling our economy and therefore controlling our currency, raising and lowering interest rates to manipulate the value of same, So anyway, if we had deflation, if there's one thing the federal government is deathly fearful of, it's deflation, because that would mean calling in all these loans. Businesses would fail all over the world, all over the country. People would lose their jobs. They wouldn't be able to pay their mortgages. The mortgages would be defaulted on, and it would just crush our economy. So they have to create inflation. Most of the Federal Reserve chairmen have never admitted it, that the Fed deliberately creates inflation. They say sometimes we have to allow some inflation. But Ben Bernanke, for all his faults, was the only honest Fed chairman in my time, because he said, and I quote, "It is in the interest of the federal government to create some inflation because in effect it lowers the national debt." So how do both affect us? Well, inflation means that our money is becoming worth less and less. So that's why people are having a harder and harder time saving for retirement, because their retirement dollars are losing value. Okay, deflation would lower cost, but it would destroy the economy. So neither one of them are good, but the government has convinced itself that it should be that inflation is preferable. I say we don't have to have either. That's like saying, well, is it better to murder people or steal from people? You don't have to do either, okay? You could work towards zero inflation. All right. Now there's always going to be a little bit of inflation. Prior to the Federal Reserve being started, we had a little inflation in times of war, because that's when the government has to borrow money usually. But then there were corresponding periods of deflation. So basically we were flat for inflation up until we went nuts and we went off the gold standard. Okay, so here's a little humor. What do you call somebody who prints fake money in his basement? Counterfeiter. What do you call someone who prints fake money in Washington, D.C.? Politician.
There you go.
It was just a little joke, but I like it.
Yeah,
okay, so basically inflation happens when a country can no longer borrow. Okay, it starts printing counterfeit money like we've been doing since 1933. Actually, since 1913. The Federal Reserve System was established in 1913. And you'll see a chart here in a second. You see the difference. They started printing the fake money, but they made it look like the real money that was backed by gold. So a lot of people were fooled by it. Smarter people, business people, a lot of times wouldn't take the Federal Reserve notes. Okay. And they only took the gold or silver certificates. But then in 1933, all of those were pulled, well, the gold certificates anyway, were pulled off the market. And so therefore, people were forced to take the Federal Reserve notes. So here's a great American myth. Hyperinflation only happens in banana republics and little countries that are not as smart as us and don't speak English. Garbage. Okay. The first U.S. hyperinflation was our very first currency, the continental dollar. This is an actual picture of a continental dollar. As you see, there was 1/3 of a dollar. That shows you how much inflation has been. There were notes created that were actually like 4 cents and 2 cents and so on, because money was actually worth something back then. And you see the signature there? That's not a printed signature. The Secretary of the Treasury personally signed every continental dollar.
Wow.
He actually signed it. And the serial number up there, they didn't have computers to automatically print a serial number and then the next number and the next number and the next number. That was hand put in, probably by a clerk. But the Secretary of the Treasury personally signed this in 1776. So that currency lasted for about 5 years. And then it completely crashed and burned. Now, in between or following that, we got the Constitution. A lot of people think we got the Constitution at the same time as we got the Declaration. No, we had a much less perfect set of documents called the Articles of Confederation that ran our country, because we were too busy fighting a war and trying to save our lives to create a really good constitution. So it was only in 1789, years after the revolution, that the Constitution was ratified and so on. And it said that only gold and silver are lawful money. At that point, we came out with the U.S. dollar as opposed to the continental dollar. Continental dollar was from the Continental Congress, our original governing body, and the U.S. dollar was from the Constitution. And in 1792, the U.S. dollar completely replaced the continental dollar at 100 to 1. Now, think about this. If you had worked your butt off for years and had your life savings, and to be patriotic, because your money was silver and gold, to be patriotic, you bought these continental bills from the government and gave them your silver and gold, because the people we needed to buy food and rifles and uniforms and all the things we needed to ships to fight against Great Britain, they wouldn't take our paper money. The other countries are smart, but loyal American patriots bought these continental dollars with real money, with silver and gold, and then they lost it. Okay, and because they got 1 U.S. dollar for every 100 continentals. that was a sad thing. I can't remember his name right now, but there was a Jewish man who a lot of people credit with actually saving the United States of America, because he had a lot of money, millions, and he loaned it to the government in exchange for notes, and he was never repaid. The government never paid him. They never even paid him interest on it. And years and years and years and years later, decades later, I think it was in the early 1900s, his family finally sued the government for the money, and I think they gave him some small amount, but with interest, it would have been, 50 times what he'd loaned. But here's a guy who was a true patriot, and some say without that money, we would not have survived, and yet they paid him back by kicking him in the teeth.
Interesting.
Okay.
Interesting.
Yeah. Okay, 1913. The Federal Reserve was born. That's the first Federal Reserve building. But it didn't have much power yet because we still had gold money circulating. And people preferred either the $20 gold coins or the $20 bill backed by a $20 1-ounce gold coin. So the Fed didn't have any power to make people accept their money. So I believe that the government was waiting for some kind of event that would give them an excuse to call in all the gold and all the gold certificates. I prefer to believe that they just waited until there was an event. Some people believe they deliberately caused it, and there's a lot of reason behind that. For one thing, the timing, 1913, and then exactly 20 years later, we get rid of all the, actually steal from the American people 40% of their wealth, all their gold money and their gold backed money, and now they can only use Federal Reserve notes. So the timing is kind of peculiar, plus the fact that the crash in 1929 was created by the federal government. Dwayne, if you want to go just buy stocks, we're not talking about highly leveraged derivatives, but just stocks. What kind of leverage can you get today?
2 to 1, best.
2 to 1. The only exception to that is if you're day trading, you can get 4 to 1, but you have to close out your positions by the end of the day. And you know how dangerous that can be. So not a lot of people take advantage of that.
Right.
So 2 to 1 is reasonable. I tell people, if you're going to use leverage, I actually have a whole webinar on this, about the dangers of leverage. If you're going to use leverage in stocks, only use like 1.5. Give yourself some room, because if things start to go south, the stockbroker decides which assets to liquidate. So he's not going to liquidate the ones that you want to liquidate, which are the crummy ones. You want to keep the good ones that still have some strength. They're going to take the ones that they want. And so that's how so many accounts that are fully leveraged end up going from $100,000 to $5,000, sometimes in a matter of weeks. Okay. So anyway, the Federal Reserve didn't have any control over that, but Congress did. And back in the 1920s, they were allowing 10 to 1 leverage. Okay. So that's the real cause of the Great Depression. First, we had the financial panic in 1929. It continued for several years, and that's where people were jumping off buildings. Think about it. If you're leveraged 10 to 1 and you have a normal stock market correction of 10%, which we can live through a normal correction with no leverage or 2 to 1 leverage. Sure. But when you're leveraged 10 times, you have nothing. So that's why successful businessmen were jumping off of buildings, committing suicide, so their families would get their insurance. That's how stupid this whole thing was. So after that, they did lower the leverage. In fact, I think they stopped margin it completely for a while. Don't quote me on that, but I believe that was the case. And then eventually they started going back, but they've never gone above the 2 to 1, 4 to 1 we have today. So the history of U.S. financial stability. from 1792, even before our country was founded, okay, to 1933, when we average it out, even including the continental money, we had fairly stable currency and no long-term inflation. We had short-term inflation, like the 5 years of the continental dollar and so on. But overall, including that, including inflation during wars, and then short periods of deflation, we were basically flat for inflation. So that's the ideal. That's what we should have. But the government wants to be the boss of the world. They want to have enough money to where we can give away. You know, we give. Do you realize we give money to almost every country in the world today?
Yes, yes, and I don't understand why.
Well, it's either because we're just really nice, or because we want to have control over them. And since it's the politicians that make the decision, which would you guess is the real motivation?
Yeah, no, I agree. Although it seems like we give money to some people that A, don't need it, and B, we still don't control them.
Well, we don't control them, that's for sure. But we're trying to keep it from being antagonistic. We give money to countries that hate our guts and that cry death to America in the streets.
Sometimes we send it over in the dark of night on pallets.
Yes, billions of dollars.
To people who say, they look in our face and say, "Die, American dog," and then we hand them a pallet of cash. Please don't hurt us. Oh, wait a minute.
In a civilian airplane, no government markings, the people that delivered it were not in uniform. This was an Obama deal. It wasn't ever meant to be known. But yeah, we gave billions and billions of dollars to the Iranians. So the other great American myth is that only banana republics confiscate citizens' money. Well,
how about Greece? Well, go ahead.
Well, yeah, Greece did it. Cyprus, they gave everybody a 50% haircut. This is money that people already paid taxes on. They had in the bank. It was their savings, and the government said, "We need it more than you do," and they just took 50%. And the Danish finance minister the next day said, "This is going to be the model for Europe." Well, he immediately was shouted down, and he had to retract and apologize. Say, I didn't really mean that, but he did mean it, and it's happening now. There are banks in Europe. They have negative interest rates. You put savings in their bank, and you get not 1%, but minus 1%, which means they charge you 1% a year to supposedly keep your money safe. Okay, and it's coming to America. Okay. When interest rates get low enough, eventually we will see negative interest rates here. The only other option is for the government to do what Cyprus did and just go in and seize money from our accounts. And by the way, the leading Democrat, I'll get political here for a minute, the leading Democrat presidential candidates are all endorsing a wealth tax. So here's the concept. You pay taxes on everything you make, whether it's from investments or wages or whatever. You have the money in a bank or in investments or whatever. Taxes have been paid. And they want to say, if you make over a certain amount of money, or if you have over a certain amount of money, the government gets to just come and just grab a big slice off the top. That's confiscation. So it's not just banana republics.
It's
called, all over Europe.
According to Joseph in the audience, it's called theft. Theft, unless the government does it.
Well, see, yeah, it's confiscate is a nice word. It implies that there's a need to do it or whatever. But yeah, it's out and out theft.
Actually, I want to confiscate your money because I'm afraid, it might hurt you, or you might hurt it. I mean, police confiscate the drugs. Well, because drugs are bad, right?
Right.
We're confiscating money. Is it bad? Go ahead.
Well, money's bad if it's in your hands, but it's good if it's in the government's hands, right?
Yeah.
So, in 1933, the President of the United States committed the worst financial crime in U.S. history. and it was done by executive order. There's a lot of controversy about executive orders. It's a way around the separation of powers. Now, I'm not going to spend too much time on this, but most people will talk, and I've even heard the president, who certainly should know better, and Republican congressmen and senators talk about the three co-equal branches of government. And we did a poll right now, and I asked how many people believe that the founding fathers intended the three branches of government to be co-equal in authority and power. Most people would say yeah, because that's been preached at us for so long, but it's a total lie.
And it's not just limited to your fiat dollars, what they can take away. I mean, they take land all the time. Eminent domain for the greater good.
Yeah.
If it's for the greater good, give it up.
I hate that phrase, the greater good. Who gets to define what's the greater good? But anyway,
not me and you.
The legislative branch, by the Constitution, is supposed to be the most powerful, and the executive branch is supposed to carry out its dictates. Okay, so think of a board of directors that sets policy, sets the budget, and so on. Then you have an executive director who carries out the board's policies. Specifically, Congress gives, the Constitution gives Congress the power of the purse. I like President Trump, and I understand why he's doing what he's doing, and I understand that he's very frustrated that he's not getting his wall, but what he's doing is against the Constitution, okay? Because Congress specifically said, we're going to allocate this amount of money, we're not going to give you the amount of money that you want, okay? And he has no constitutional power to say, well, if you won't give me what I want, I'm just going to take it. That's like
actually, Congress did give him that power. Congress, it was their power, and they get, folks, never give away your power. Determine what your power is. Determine what and never give it away, ever.
Well, you're talking about the Emergency Powers Act of 1976, okay?
Yes.
And that's been very broadly interpreted, but it's never been used in this manner. It's never been used to countermand what Congress has already done. Congress specifically allocated a certain amount of money for the wall, and no other president has ever tried to do what he's doing because it wasn't anticipated for that. It's for various different kinds of emergencies that the president can act, and he has some discretion about how he can use already allocated funds. But it's never been used in a situation where the Congress, who has, by the Constitution, the power of the purse, set aside a certain amount of money, and then the president said, well, heck with you, I'm going to spend what I want. Anyway, that's just my opinion. I'm not a
where did Barack get his money
attorney
that he gave to Iran? Did Congress approve that? He just did it. He just wrote the check, except he did it with cash. And where did that cash come from, by the way? I mean, that was physical money, cash. Now, we know that they only print up a small percentage of the money supply, which they no longer report anymore. There used to be a number you could know. What's the current money supply? But you don't know that anymore. But
about 6%.
Did somebody stand in line at the instant teller machine? Because you can only get $300 at a pop, and just over and over until they loaded up that pallet. I mean, where did that money come from? Was it under somebody's floorboard? Was it in the couch? Where was it? Huh?
It wasn't just dollars, Dwayne. It was British pounds.
Oh.
It was euros.
Oh. See, I learn something every day I come here.
6 or 7 different currencies that they had to pull together from various different places to make this happen. Now, technically, the reason for it was that we owed money to Iran. Because remember, after they held our hostages for 400 some days, we froze all Iranian government bank accounts. And we've been holding that money. And part of the negotiation was that they wanted that money back. Our government, the Congress, they didn't want to give the money back to them, right?
And Barack said, "Oh, just give them their money back."
So he made, that was a side deal he made with them that wasn't part of the Iran big deal, the nuclear deal. So Trump was 100% right, by the way, in countermanding that executive order.
Yes.
Because any executive order can be countermanded by one of two entities. It can be countermanded by the legislative branch, or it can be countermanded by the next president or any future president, because the executive order doesn't have the effect of law. So that's what Congress tried to do when he put out this particular executive order under the Emergency Powers Act, and it was condemned by Republicans and Democrats in both houses. And the Republicans who went against it said it wasn't constitutional. So it's just not my opinion. There's some very knowledgeable Republican conservative people said that you can't do it this way. We know you need the money, but you can't do that. It's like somebody going to the bank and trying to get a loan, and the bank says, "Well, I can't give you, $10,000, but I'll loan you $1,000." And you say, "Well, that's not enough." So you come back later on with a mask and a gun and get $9,000 more. And that's basically what Congress condemned, both houses. But there's not enough of them to believe that way to override a veto. So he vetoed it, and it won't be overridden. But anyway, just to move on, executive orders have a lot of power. These were not intended, they're not in the Constitution, by the way. The principle of administrative power is there, but executive orders as such are not in there. But when Congress, I'm sorry, I can't help it. I'm a teacher, and whenever I talk about these things, I have to teach some history because you have to have some context. When our nation was first founded, Congress only met every 2 years, and they only met for a few months. And these were people, they were mostly gentlemen, farmers, merchants, and so on. They supported themselves. They're not like the fat cats up there now that go up there broke and come back millionaires. I mean, even people that served one term in the Senate always come back at least a millionaire. It wasn't meant to be an occupation. It was meant to be public service. But there's a problem there. They didn't have faxes and instant communication, emails and text and WhatsApp back then. And for Congress to meet, it could take weeks to get them together because the people from the western states had to travel by horseback or carriage or whatever. So the president did some things by executive power that needed to be done on an emergency basis only between sessions of Congress. But Congress always had the power to countermand it. So there was a check and a balance on it. Here's the Executive Order 6102. How are we doing for time?
We still got 5 minutes.
Okay. This is Executive Order 6102. And you could look it up on the internet, find the exact language. But basically, look at the date. On or before May 1st, 1933. Okay. And it was issued in April. Well, how long had FDR been president at the time he did this? A matter of months.
February, yeah. Or January, end of January, he was inaugurated.
I think you're right in the first. I think initially it was February, and then they moved it back to January. But it's a matter of months. So this had to be something that he had in the works and planned even before he took office. Okay, probably as soon as he was elected, he started working on this. And basically it changed the whole financial landscape of the United States. And it was done by executive order without authority of Congress. Now, Congress could have countermanded it, but they wanted it too. They wanted the government to be able to print as much money as it wanted to without any oversight. Remember, the gold standard was a powerful, powerful hold on the authority of government, because it meant that you couldn't issue $1 of paper money unless there was $1 gold in the treasury. Okay, so by doing this, it gave the president and Congress the ability to just print all the money they wanted to buy all the votes they wanted to. So they were for it, or the majority of them, but they didn't dare vote for it. So they cooked up this deal where he did it by executive order, and then Congress agreed to it by sitting on their hands, by not issuing a disapproval and countermanding the executive order. They allowed it to stand. So as far as I'm concerned, Congress is just as complicit as the president was in this executive order. And basically, that opened the Pandora's box of inflation. And that's a good place to stop.
Will we pick up here next week?
I think that'd be a great idea.
Okay, very good. Dr. Tom, stimulating and interesting discussion. As always, we so look forward to you on each and every Thursday. Folks, do go to CFRNgold.com. That's one word, CFRNgold.com. You get a starter pack from Dr. Tom. You'll learn a little bit more about this thing called investment grade gold and how it may just have a place in your portfolio. Thanks, Dr. Tom.
Thank you. Thank you for the opportunity.
Talk to you
God
soon.
bless.
Bye-bye.
Bye-bye.
All right. Time has passed. We're going to jump to our good word for the day. Psalm 18:6. In my distress, I cried out to the Lord. Just saying, it's usually the only time we cry out. It's when we reach the end of ourself. That's where we find the beginning of God. When we're fat and sassy, money in the bank, gas in the tank, food in the fridge, who needs God? But let the gas run out. Let the bank take your money. Yeah? No buttermilk in the fridge. Help me, God. There are times in life, and the best thing that you can do is cry out to God from the very depths of your being. Don't worry about looking undignified or having people think you have no faith. Because the psalmist said in Psalm 18:6, in my distress, I cried out to the Lord. Yes, I prayed to my God for help, and here's the good news, he heard me. Now, if you're a mother, even a dad, you know that cry. It's different. It's not a temper tantrum or a whine for attention. It's a genuine cry of distress. And if you're a parent, man, you can hear that thing across a crowded football arena. Certainly from the toy aisle at Walmart. And even though this cry may not come at Walmart or in a crowded football arena, but in the dead of night, instinctively, before you even have time to think about it, your feet hit the floor and you're at your child's side, holding them, changing them, feeding them, comforting, whatever they need, because you heard the cry. And see, that's how God feels about you. He knows when you're whining. He knows when you're kind of being a little bit of a jerk. But he also knows when you really need him. When you get so low that you're reaching up just to touch bottom, cry out to God. Here's what David said, Psalm 18:16. He reached down from heaven and took me and drew me out of my great trials. On the day when I was weakest, they attacked. But the Lord held me steady. He led me to a place of safety. For he delights in me. Say what? Seriously? See, David discovered that God was his high tower. Read about it, Psalm 18:2. In Bible times, a high tower was a place of safety where the enemy couldn't get to you. Proverbs 18:10. The name of the Lord is a strong tower. The righteous run to it and are safe. It represents a place of security in God where you're lifted above the threat and the circumstance. It's where you can regain your perspective, a place where you can look ahead and know that this trial, because that's what it is, will soon be over. This is the thing. Things are temporary. Life is eternal in Christ. So, whatever's going on right now in your life, good, bad, indifferent, I want to give you this blessed assurance. I want to give you this high probability thing that if you cry out to God, He will answer you. And that's our good word for the day. Thanks so much for tuning in. Whoever you are, wherever you are, may God continue to richly bless you with His mercy and with His grace. And I'll see you at the bell.
Remember this, there is no greater return on investment than to see a human life changed and given hope. As always, pray hard and trade safe. Any financial information discussed on this show is simply the opinion of our host, Dwayne Reeves, his co-hosts, and guests. To learn more about trading Emini Futures or to take a 1-week free trial in our live trading room, call 1-866-928-3310. 866-928-3310. Information discussed on this radio program should not be construed as a recommendation to buy or sell any security. Always do your own due diligence and consult with a licensed securities broker or financial planner before making any investment decision.